A whale just dropped $2 million into Lido at 96 cents. Lido just launched its V3 Testnet, and Ethereum's Pectra upgrade is igniting the liquid staking narrative once again. This could be the foundation of something big. In this video, I'm diving into the smart money signals behind Lido's next possible breakout, the tech upgrades powering its momentum, and why Lido could be one of the most undervalued DeFi tokens right now. Plus, I'll walk you through a high conviction chart setup with 3 take profits and a defined stop loss, all backed by real on-chain data. Let's unlock the alpha. Starting now. A whale just scooped up 2.27 million Lido tokens at 96 cents, dropping $2.2 million in DAI, a dollar peg stablecoin. And guess what? They still have $737,000 on the sidelines, likely waiting for another dip. And the market noticed. Lido pumped 11%, hitting $1 in a matter of hours. This is possibly a strategic accumulation ahead of a bigger wave. So, what do they know that the rest of the market doesn't? Let's find out. Zoom into the 2-week chart, and here's what you'll see. Lido is trading inside 2 major channels, a long-term ascending channel, guiding macro bullish structure, and a medium-term descending channel, the one we've been stuck in since early 2024. Right now, price is pushing toward our first take profit zone around $1.50, which perfectly aligns with the resistance of the descending channel. This is the key inflection point. A breakout here changes everything. Break it cleanly and we're looking at TP2 at $2.50, the midpoint between local highs and Fibonacci confluence, and TP3 at $5.50, which aligns beautifully with the upper bound of the long-term ascending channel. Heikin-Ashi RSI is flipping bullish. VRVP on the left shows strong volume support beneath us. Momentum is building and whales are already in. Your stop loss? Set it just below the 60-cent support, which aligns with the base of both structures. This is what traders dream of. Convergence of structure, momentum, and fundamentals. So, let's talk fundamentals, because that's what keeps Lido interesting even when price is down. Lido is the #1 staking provider in the world with over $33 billion in assets under management. It grew by almost $12 billion in just 30 days. Let that sink in. It has over 551,000 stackers and supports Ethereum and Polygon. And in terms of DeFi total value locked, Lido ranks second, right behind Aave, with $24.6 billion locked up. That puts Lido ahead of EigenLayer, EtherFi, Spark, Binance Staked Ethereum, and everyone else. Even in a volatile market, people keep trusting Lido to stake their Ethereum. Now here's where things get exciting. Lido just dropped its V3 Testnet, letting builders create custom staking solutions with stVaults, a new primitive built on the Hudi Ethereum Testnet. Translation: Lido is moving from just another staking provider to a staking infrastructure layer, one that devs can plug into just like you'd plug into AWS or Stripe. This is how ecosystems scale. Let's talk passive income. Lido now offers a quantifiable 11% APR via the Decentralized Validator Vault. That includes Lido staking, 2.9%, SSV rewards, 2.8%, ABA rewards, 5.3%. Everything is tracked via Mellow Protocol and points accrue hourly. If you're serious about yield farming, this is where you want to be. And if you're brand new to DeFi and want a fast, no-fluff guide to getting started with staking, yield farming, and airdrops, then check out my eBook DeFi Financial Freedom, the Ultimate Beginner's Guide. It's just $4.99, and it'll save you from costly mistakes while showing you how to build sustainable crypto income. Links in the top pinned comment. Let's zoom in on the data. Over $23 billion of Ethereum is staked with Lido, generating a big fat real revenue. The number of Lido holders is steadily rising. So is the supply of staked Ethereum. And according to Denomeme, Ethereum ETFs focused on staked Ethereum are coming by the end of 2025. That could be a tidal wave of demand, and by extension Lido. The charts may tell you where the price is going, but the data tells you why. Now, this stat surprised even me. Lido's development activity has grown by 150% this month, ranking it among the top 10 projects by developers growth, alongside IOTA, ZetaChain, Hedera, and Multiverse X. This means more upgrades, more features, and more resilience over time. While others are hyping memes, Lido is building infrastructure. That's where the real value is. Ethereum's recent Pectra upgrade is another bullish tailwind. This upgrade boosts Validator UX and smart account support, making liquid staking tokens like staked Ethereum and protocols like Lido more attractive than ever. In fact, on May 29th, Lido jumped 11% alongside EigenLayer and EtherFi, all part of the liquid staking narrative heating up. This could be the early signal of a summer alt season led by Ethereum ecosystem tokens. And Lido's perfectly positioned. Let's bring this home. Lido dominates staking, has growing dev activity, is riding the Ethereum liquid staking tokens narrative, offers 11% staking yield, chart is showing upside momentum, and whales are buying. Lido isn't just another DeFi protocol, it's part of Ethereum's core infrastructure. I'm not saying Lido will moon overnight, but I'm saying it's laying the groundwork for a massive move. And right now, it's still under $1. Make your own call, but don't say you didn't see the signals. If this video helped you see the bigger picture around Lido, consider hitting that like button and subscribing for more DeFi insights. Let me know in the comments where you think Lido is heading next. And if you want to level up fast in DeFi without falling into beginner traps, grab my ebook today. Link is in the top pinned comment. Now, go check out my video where I broke down the hidden alpha behind Uniswap's comeback. You won't want to miss that. Thanks for watching, and I'll see you tomorrow in the next one.